All right, welcome into Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. I think it's the black and white jacket that gives that away, and maybe who knows. But thank you for joining us if you're just joining us, and if you've been with us all day, again, it's my job to make you stay. All right, let's see what we can do here. Hopefully I get a little help from the markets because they have been a little bit difficult here. But let's start with corn, see what's going on with that corn table. That's higher, a little bit higher. July's up 5 1/4 cents to 7.94 1/4. And new crop D's corn's up 2 cents to 7.26 1/2. So that's a good way to start, but this is not a good way to start. Let's take a look at beans. Well, there you go. 18.5 cents lower on that July contract, 16.69 1/2. Good news is we're well off the lows. And Novi beans have lost that $15 handle, 14.86 1/2, down 18 3/4 cents. So that's no good. Let's take a look at Chicago wheat. What's happening in the Chicago wheat market? This one too is a little easier. July's off 2 cents to 10.73 1/4, well off the lows. Well, middle of the day's session there, trade-wise. And we even go out the curve, we're still only about a penny and a quarter lower, even in the March of 2023 to 10.67 1/2. How about hard red wheat in Minneapolis? Or no, in Kansas City. Minneapolis. Getting my cities mixed up here. All right, July up 3 1/4 cents to 11.52 3/4. And that too is in the middle of the day's range, basically. And we do see Dees up 4 cents, 11.48 1/2. So hard red wheat in Kansas City, not too bad. How about Minneapolis, the spring wheat there? 5 1/4 cents higher in July, 11.68 even is all right, but we're 12 cents off the highs and 12 cents off the lows. How's that work? Well, right smack dab in the middle, up 5 1/4. And if you go out to March, though, we're up 10 1/4. Well, no, see, I got caught. We're down 1/2 in the D's, 11.50 3/4. March has not traded yet today, so don't let that fool you like it just almost fooled me. Here we go. Cotton, July off 170 points to 134.15, and that gives me the chance to bring in our next guest analyst, Todd Horowitz from Bubba Trading. He's in Chicago. Todd, well, what do you think with all those we've got a lot going on in the world right now. What sticks out at you when I read off those prices, or if you have anything else to get off your chest, have at it?
I got a lot to get off my chest, but I can't always do it live. But, I think, first of all, I think a lot of the selling today in the grain markets is just basically wholesale selling with everything, because I don't think there's much green anywhere in any market, from gold to equities to all of them. And I think, we see these kind of days, Scott, where they just sell everything because everybody's thinking about something, or they're trying to raise money to margin something else. I think the grains still look pretty good, Scott. I think, unfortunately, prices are going to go, I think, a lot higher, because if we look at the problems, with the supply chain and other things around the globe, and plus we talk about Mother Nature here, it's not a very good picture for lower prices. It's a picture for much higher prices, which could pick up any time. And I think these dips are just opportunities to buy, because the news has not changed. The fundamentals have not changed around them. We're going to be short some crop next year, and we're going to have a lot of issues. And I think that's going to only push prices higher.
Yeah, I would say the only thing that seems like it could have changed would maybe be a demand story or a growth story, seeing what's been happening with those shutdowns and what that might do to demand. But, that was kind of there already. And I think that just because the stock market sold off 1,000 on Friday and is off again today, there might be a little bit of wobbles in there, and that's what we're seeing. Also, some week longs getting out of the market. So I'm going to hold judgment. I agree with you. The news hasn't changed significantly from Friday till today. We just have got some bigger movers that might be kind of questioning our commitment to what we think, and we'll have to wait and see, because only time will tell there. All right, stay right there. I'm going to go away, pay some bills. We're going to come back and talk livestock with Todd Horowitz, Bubba Trading, after this. All right, welcome back to Market Day Report. I am Scott Shelley, otherwise known as the Cow Guy. Thank you very much for joining us. If you're just joining us, well, let's not waste any time. Let's get into these live cattle markets and see what's happening in Chicago. The Chicago live cattle market is off, or lower, or easier. All the words that mean the market's going down. $3.42 lower in June to 135 even, but we're not on the lows yet. We're about 55 cents off the lows there, so we'll keep an eye on that one for you. As you go out the deferreds, we still see some losses there as well. How about feeder cattle? Let's take a look at that feeder cattle market. That's off $3.45 in the May, and that's about 30 cents off the low. So we're going to have to keep an eye on that one for you. But we do see $2.30. Those are losses going out the deferreds all the way out to see October. So again, I'm not a very good table when it comes to that. But we had a report, right? And that's the reason why we're lower. Friday's report, and we've got we're hurting here, and it looks as though we're limit down in June hogs, 114.02. It's off 475. and we're lower by 450 in the July to 115.52. So that's also not a good board. Let's bring back in our guest analyst, Todd Horowitz. Todd, thanks for sticking around. Anything look suspicious to you there, or can you find anything that is nice to talk about?
Well, I mean, what's nice to talk about it, I assume that hogs would make a limit down move at some point here. I mean, look at where they are. It's not like they're limit down from 60 cents or limit down from $1.18. So, to me, there's going to be more demand. And I think that, cattle will continue to trade. It's the more classier part of eating. So, if you have to cut your budget, that's the first place you're going to cut if you're cutting protein. And I think we could be fine. We're coming into grilling season, but listen, there's a lot of issues, Scott. And when people have to make a decision on filling their tank and eating, it's a tough decision. So they've got to make it. They've got to balance everything out. And I think that the cattle is weak for that reason. And I think it will continue to be weak unless we get some major movement in crude oil. And I'm not talking today's, down $5 or $6. I'm talking about, getting crude back into the 60s or 70s. So I think that's going to be an issue ongoing until we settle this inflation.
Right, and this inflation is not going to be solved overnight from going from 8.5% to 2. We're going to be at 8.5, then 8, and then 7.5, and then 7. I mean, that's going to take a long time. And at the same time, you're going to have the Fed still raising interest rates. So I agree with you. This is going to not bode well for the economy. It's going to be difficult. However, we do need to still eat. These products will still be in demand, and they're in short supply in some places. So we're going to have to wait and see. But I don't think that the Fed's going to be able to take care of inflation like they do, which bodes well for the prices of all these products. So I think you and I are on the same page there. All right, thank you very much. Todd Horowitz, he's with Bubba Trading. He's in Chicago. We're going to bring this back to Nashville so I can throw it over to Jan.